Inequality? I tell you what, let's bring in Main Street Asset Management LLC Chief Investment Officer Aaron Gibbs. Aaron, you always explain things right. No, what I mean by that is, I'm never confused when you leave the studio. And I know you've been looking for quality names. You talk about that a lot. Do you consider these kind of things, like, in other words, like the ability to pay debt, those sort of things?
Yeah, I do, certainly. And when you're looking at fundamental research, certainly your debt to equity ratios and your ability to pay your debt is very important. I don't know what group of companies they're talking about, but for me, I don't think it's anywhere as dire when you're sticking to some of the bigger indices like the S&P 600, S&P 500, NASDAQ 100 type of thing.
So you're okay with most of those. So let's talk about that, because I know you like the small caps right now. In this case, it's the S&P 600, not the Russell we're using, versus the S&P 500. We can see, obviously, this is your 4 PE ratio, less than 15%, almost 20% here. It seems like a no-brainer, but it's been like a no-brainer for a long time, and it hasn't worked yet.
Exactly. And so I know I'm going a bit on the edge and saying, like, this is the turning point, because we haven't seen the space between these two lines really close just yet. So, like, this might be an early call. But if you look even farther back, this blue line, the valuation, actually normally trades higher. So, like, the past 10, 20 years, normally your small caps trade at a premium to your large caps. And so this past 2-year pattern has been exceptionally unusual. And that's why I say, given that the expectation that Feds are going to cut the rates, that we're going to see lower income rates, because this is all about what the Fed is doing. This discount
this is the high end. This is the fight against inflation.
This fight against inflation, fight against higher interest rates. And so with that turn, this is your opportunity. If only on a valuation perspective, even if they don't grow faster, you're looking at an easy 10% outperformance just on, like, getting to back where they normally.
Just getting back here, but I also love the fact that you said that historically goes here. So when it gets here, it might actually break out.
Exactly. It could easily, because normally it trades at like a 5% premium. So we're looking at sort of an easy layup. It's just, let's just hope it doesn't take another year to return. But I would say within the next 6 months, we could finally see that rotation.
But you can start positioning yourself now, though, right?
Yeah, I feel like it's a safe bet.
These are some of the names that you like. For folks on radio, the small cap play here, it's SLY is a symbol. And that represents?
That's the S&P 600. The only reason I use the S&P 600 versus the Russell 2 is it's just a little more selective.
Obviously, better quality.
Yeah, just slightly. But it trades very similarly. But I prefer it because it's just companies that have a little more financial data to do a dive into.
TLT yesterday was the second largest volume in history on TLT.
Yeah.
Everyone is jumping in there. Are you concerned about everyone, how crowded it is?
Absolutely. Look, I've been making this call. I'm just saying I still believe in this. I still think we could get at least another 1 to 2 months of outperformance. There's just so much when it comes to interest rates and where it could move, and particularly the long-term treasuries.
To come down a lot more from where they are now.
And particularly not so much on the short-term side, but I think on the long-term treasuries, there's still some room to run on the prices.
And you like the home builders, at least for a trade, Pulte here.
And this is my shortest term, so we go like long, medium, short.
Okay.
This is the one where I think you might only get just a few weeks, but again, it's very much about interest rates. If interest rates go down, it's easier for home builders to get capital, type of thing. And Pulte has one of the cheapest valuations.
And those mortgage rates coming down,
mortgage rates coming down. So this is just a short-term bet. It's already getting slightly near its resistance band, but I think there's still a bit more run for it.
And of course, Toll had a strong number this week too.
Exactly.
Great stuff, Aaron. As usual, appreciate it. All right, folks, coming